Let's connect with Sandip Sabharwal. And Sandip, why don't we get your thoughts? FY25 will be better than FY24. They have been improving their utilization, and that order book number, I think, is what the street will be pleased with. Your call?
I think Manj spent a lot of time creating positivity around the result and pushing the management to give positive comments. But I think the concerns remain, and I believe that the most significant part of the commentary is that the AI is changing so fast that even companies who want to outsource their, say, out of TCS, are seeing their projects and what they need to do, how the entire regenerative thing will work out, change so fast that they are getting orders, but those orders are not getting executed because the projects themselves might become irrelevant or change a lot. And I think that creates near-term uncertainty on growth. So they've done very well on margins, and I think that restricts the downside. But I don't see the results or the commentary says anything which could create any significant upside for the stock price in the near term.
I may argue back and say that the downside also would get limited, because if you are getting orders, they will eventually be executed. What matters is that margins have gone higher in a competitive market because of the AI sort of fear. So while the best, it may not spark a rally, but it may just restrict the downside, and this sector now could qualify as the sector you would really want to buy when you have a buy patch.
Yeah, I agree that downside is limited, but then valuations are also not cheap. So that's why the upside also is restricted. So it's a no-go sector in my view. So for people, now we don't invest in the equity markets not to lose money. We invest in the equity markets to try to make money. And to that extent, I don't see any reason to buy the sector overall as a whole at this point.
Where else, to your mind, money can be made?
I think near term, given what's happening geopolitically, as well as the kind of results we saw out of large US banks on Friday. So I think the result season is going to be volatile. So keep some cash on the sidelines, watch the result season, see how opportunities come up. The directional trend still seems to be on the Capex oriented stocks in India, with possibility of some consumer durable participation in the near term. So I think that's where, like talked of those stocks, like what we have picked up, like Voltas or V-Guard, or looking at VIP Industries as a turnaround candidate, or some beaten down consumer stocks. So I think that's where I look for opportunity if some bad results come and the stocks fall further.
And within the Capex theme, although we've discussed this as well time and again, but where is it that you find opportunity at the current valuation, Sandeep?
See, Aisha, valuations are a bit stretched. So many of the stocks are still near 52-week highs, but among the stocks which we hold NCC, we hold Thermax in few of the portfolios, we hold Ahluwalia contracts, VA Tech Webag is something which we hold, and I think that's a very good longer term story. And here the valuations are still not stretched despite the stock doing well. So these are the ones which come to mind. And then on the larger cap, large size companies, I believe companies like ABB's continue to do very well. Then there's the railway capex thing. So there are a lot of companies which we can talk of, but a few of them could be these.
Let's go back to that good old construction theme. With the construction theme, Ahluwalia is right up there. Great margins, track record. Buy these stocks when there is acute pain on the street. But now that it appears decisively that real estate is in a bull run, commercial real estate has started picking up, there is more demand and less supply, it means there could be a huge advantage to some of these so-called construction, some of these so-called constructors. Apart from Ahluwalia, what else is there on your radar?
So I think I tend to buy very few stocks and have a bigger allocation. So we've largely stuck to NCC and Ahluwalia. There are other companies companies which are there. So I think the main thing which investors need to see is that there should not be too much debt, and companies should not be taking BOT kind of projects which stretch the balance sheet. So I think those are the key criteria. But there would be other companies, but I wouldn't be actively tracking them so much.
Sandeep, have to get in your views on the BJP manifesto. I mean, quite a few points made about the economy, about manufacturing as a segment, agriculture, housing, and of course, a lot of focus on defense and railways as well. Any, drawing points from there, any new ideas that have come up to you?
I think it's the same as what they are doing right now. So no real change per se. So I think the themes will remain the same. What additional they can do on these front is something we need to recognize that there is transformation in many of these sectors. Like you take railways, you take defense, there is a complete transformation happening, even on the power side. So I think the economy is getting transformed. Many of these sectors are giving multi-year or multi-decadal potentially opportunities. And to that extent, these will play out for investors. Whoever has the patience to remain invested, these will play out.
Sandeep, I'm just looking at the top themes. Make India less dependent on crude. Make agriculture and take it up as the global hub in terms of creating value. These are small ideas, but when they tend to be implemented, and we've seen BJP's ability to do it in terms of scale, reach, size, they have a multiplier effect on the economy. And I'm just bringing this point out for our viewers that look at defense. It started as just under this theme of Atmanirbhar India, reduced dependence on exports. But the snowball effect and the multiplier effect it has had, that it really created a real new wave which could have a multiplier impact on India's GDP. So one has to look at that concept, Sandeep. Can we get a theme from the manifesto, whether it is energy transition or agriculture or perhaps part of manufacturing? Because that's the way things are implemented, then a new wave of multiplier effect will be.
Because in agriculture, there is very little that can be done, which is playable via the stock markets, except for like being more mechanized, which could benefit a few companies, but then nothing significant. But I think what we have seen in the last few years of the current government is the execution. Where companies used to get killed earlier was that projects or themes used to get announced with great fanfare, but there was no execution, or they would start getting executed, then get stalled in between. I think that's not happening now. Companies get into something, they are able to execute it and realize their money also. And I think that's the big change that's leading to what's happening now. And I think it will continue. Now, new themes are very tough to pick out. I think the same themes continue, which have been there over the last 2-3 years at least.
To have you on the show today, we got to brace ourselves.
If you like this video, then like, share and subscribe to ET Now.